Recording in progress.
Good afternoon, everyone. I want to welcome you all to the Tax Resolution Help Center. My name is May. I will be hosting today's session and introducing today's speaker. I will also be coordinating the Q&A chat session at the end of this session. I want to congratulate all of you for taking steps to deal with your taxes. Taxes from all sources, including income tax, payroll tax, property tax, excise tax, and sales tax represent a 35% to 60% reduction in your personal savings and wealth. As you probably know, those with 1% of the wealth in this country have experts to help them pay a small percent of tax. Our goal is to help you reduce how much you pay in tax by educating and informing you on ways to reduce past, present, and future tax expenses. We think you are entitled to live a happier, healthier life by keeping more of what you earn and getting the taxman off your back. Our goal is to provide you good information with the opportunity to ask questions that are important to you. The presentation itself will last about 20 minutes, plus 20 to 30 minutes for you to ask questions by chat. I will select the questions and present them to today's expert. If you wish, you can include your first name and your state. That would be great. Other than that information, your identity is not mentioned. The information you are receiving in this session is not specific tax advice. If you want specific tax advice for your situation, you are free to contact today's expert or any of our tax experts at Tax Resolution Help Center. As you know, these group sessions are included in your do it yourself membership fee of $20 per month. If you are not yet a member, please sign up today. We need your financial support. To better understand what might be on your mind during the session, I might include some pooling questions that to ask you. I will then finish with a 5-minute wrap up. Also, a survey will be sent looking for your feedback. And finally, this session will be recorded. The topic for today's session is dealing with IRS and state tax notices and letters. The tax expert for today's session is John Shantz. Sean has the unique perspective of being both a business advisor and business owner. His wide ranging experience can help business owners and employees get through everyone's least favorite topic tax compliance or the repercussions of non compliance. With that being said, introducing John Shantz.
Thank you, May, and hello, everybody. I'm glad you're here today, and it's nice to be with you to talk about taxes. So today's subject, dealing with IRS notices, letters, and also the interest and penalty if you happen to end up with a notice or a letter. And as May said, this is going to be a short presentation to try to keep it to 15, 20 minutes and give you plenty of time to answer or ask questions. There's a lot to go over in this area, and this will just be a brief overview to kind of get you started. Quick little bit about me. Again, my name is John Shantz. Here's my email address and telephone number. You are welcome to contact me after this presentation or at any time if you have any specific questions. I will and if you need something more in depth, we can talk about that as well. When I'm not doing accounting and tax work, I'd rather be skiing. That's my great passion in life other than work. And I hope you have something that you like to do as much as I like to ski. The quick summary of the topics today: notice and letter basics, interest and how it's computed, penalties and how they are computed. I'll actually take a look at a IRS notice so you can get an idea of what that looks like and what to look for if you happen to get one. So, you may have heard of the old adage, if you happen to get into trouble with a fire, it's stop, drop, and roll. And I like to say, when it comes to taxes and tax notices, stop, drop, and read. Stop everything, stop what you're doing, drop everything else, read the notice, take it seriously, and find out what's going on. In general, if you get a notice from the IRS or your state, it's most likely not an audit, unless it is, but the chances of it being an actual audit are very small. Usually they're looking for additional information or something was left out on your tax return. So initial steps, if you happen to get a notice or letter, natural reaction to get stressed, worried, nervous, that's okay. It's normal. Again, you just take your time. It's a chance for you to learn something about your tax returns, find out what the IRS or state is asking for. And your first step, again, read the letter, pull out a copy of your tax return that the IRS or state is asking for. That way you can compare what's in this letter to what's in your tax return. A few important takeaways when you have a notice here: keep the notice, don't get rid of it, deal with it now. It's not going to get better with time. Get it over with, find what they're asking for, and again, deal with it. Take a look at what type of notice it is. Is it a CP 2000, a CP 11? That information will be on the letter. And once you know what kind of notice you have, if you still can't figure it out by reading the letter, you can go right to the IRS website, type in, IRS CP 2000. It'll take you right to the web page and give you more information what to do with that notice. Take note of the tax year and date of the notice and the date to respond to that notice, and what kind of tax due, interest, or penalties are due on that. And we'll look at this a little bit when we look at an actual notice. Next steps after the initial reaction and dealing with it is, once you've read the letter and understand what's being asked of you, if you agree with the information, go ahead and provide the information or pay the tax due. The letter will tell you exactly how to do that. If you can't pay right then and there, you can go to the IRS and set up an account with the IRS if you don't have one, and you can set up an installment plan if you meet the requirements. They're pretty lenient, so the chances are, unless you got a really big number or you've got a really bad history with paying taxes, you'll be able to set up some type of installment plan. And then what if you disagree with the notice or it doesn't seem right to you? Gather information, the document's asking for, the notice is asking for, to back up your position, follow the instructions on the notice on how to respond. And whenever you respond to a notice, always send it certified mail if you're not talking to somebody or faxing information to the IRS. So we'll take a quick look at one type of notice here. This happens to be a CP 11 notice. And you'll see when you get a notice, go ahead and take a look up here in the upper right corner. It's going to tell you what kind of notice it is. Like I said, this is a CP 11. It's going to tell you the tax year. You're going to have the date of the notice, which is not going to be the date you received it, but that's the date of the notice that they're using to determine when you need to respond by. Your social security number, a phone number for you to call the IRS. And if you try to call the IRS, you're probably going to have a very difficult time getting a hold of somebody. They've been backed up the last couple of years with COVID. It's been a real point of frustration for both professionals and individual taxpayers. But up here, that's the basic information you're going to want to look at. Down here, they're talking about here's how much you owe and when the due date of that payment is. And they're computing interest up until that due date. So that's the real summary. The meat of it, of what's going on in this notice, here's what you need to do immediately. It tells you if you agree with the changes, what to do, and if you disagree with the changes, or the information in that notice what to do. And then down here, it gives you the payment options, tell you how you can make the payment now, or if you need to set up an installment plan. So again, you kind of have to take your time just weeding through the notice and reading the details and understand what's being asked of you. And this specific notice here, you know, on this line, I'll tell you what changes are being made to your tax return and why. So the information was changed because of the following reasons, and they'll list the reasons that they're going to apply in your situation. Everybody's will be different. Tax calculations here. They'll have two columns in this type of notice: what you computed, what the IRS is computing, how much you've paid. Then it's going to come down to interest charges. And over on the last page, they're telling you how the interest was computed. Every notice, every type of notice does this a little bit differently. So if you end up in a situation where you get a notice, don't be shocked. It doesn't look exactly like this, but that's just one type of notice. I wanted to give you a chance to look at that and see what it looked like. So interest, if the IRS is assessing additional taxes or underpayment of taxes, they're going to charge you interest on the balance you owe from the date it was due to the date they're computing on that notice. Right now, the current interest rate, 7%. Those change quarterly. And you know, prior years when interest rates are a little bit lower, that number was quite small and doesn't add up too fast. At 7%, depending on the balance you owe, it can add up a little bit quicker these days. If you put yourself in an installment plan, you're going to get charged interest during the period of that installment plan. And in general, the IRS is not going to remove interest for reasonable cause. If you have some good, some reason it was late, it's not going to matter when it comes to interest. Penalties are a different story. We'll talk about that next. The IRS charges penalties for a number of different reasons. It can be failure to pay your tax on time, failure to pay the tax you owe on time. And I think I said pay tax. File your return on time. That's a failure to file penalty. It's 5% a month to a max of 25%. Failure to pay your tax, 5% a month, maximum of 25%. Those two penalties can go together, so they can add up quite a bit. I like to say the easiest way to avoid the failure to file your tax return is go ahead and file the return. Even if you can't pay the tax, file the return. That will eliminate the possibility of this failure to file a return penalty. There's also an accuracy related penalty, 20% of the portion of the underpayment that happened because of negligence or disregard in the case of substantial understatement. Going to add up to a 20% penalty. A little bit on the rarer side, but it's out there. If the IRS determines you willfully just failed to prepare an accurate return. And then there's also penalties for providing accurate information returns. Those penalties can vary and can be substantial. That usually relates to if you're a business owner and failure to provide W-2 forms to the employees, if you fail to file 1099s, if you're required to file any other type of information returns, there are a number of penalties associated with that. And then the IRS does charge interest on penalties. Other issues that can come up, as I just mentioned, information returns, W-2s, 1099s. So for small businesses, you got to keep on top of that. When it comes to payroll, sales tax, quarterly estimated payments, if you don't know what you're doing, get professional help. When it comes to payroll, go ahead and get a hold of a payroll service. There's lots of good ones out there these days. Pricing varies, but in the long run, that price is a small price to pay. to get things done timely and accurately. It'll take a big headache off of your shoulders if you are a small business. And then if you end up with an IRS notice and you owe some penalties, don't forget about the state implications. If you're in a state that pays tax, that has individual income taxes and business taxes, you're gonna have to file with the state or check with the state as far as what you owe based on what the IRS came up with. So a quick summary of some of the stuff we talked about here. As I mentioned, stop, drop, and read. Stop what you're doing, drop what you're doing, read that notice. Every notice is out there. Some of them are pretty long. There's a lot of wording there, but take your time, read through it, find out what they're asking of you and what needs to be done on your part. Again, IRS is going to charge interest. If you file an extension for your tax return, that's an extension of time to file your return, not an extension of time to pay the taxes that are due. So if you're going to file an extension, you can't file your return by April 15th, go ahead and figure out a reasonable estimate of what you might owe with your tax return and make a payment. If you're a little bit unsure, go ahead and make some kind of payment. Try to get as close as you can because you're going to get charged interest. And if you owe too much, you could get charged penalties for underpayment. IRS is going to charge various penalties depending on your situation. If they do, penalties can be abated. You can ask for them to be abated if you had a good reason, or if you always filed your returns on time and say, hey, I respectfully request you abate these penalties. It was an honest mistake. People make mistakes. So it never hurts to ask to have those penalties abated. As I mentioned earlier, best way to avoid penalties, file a timely return, even if you can't pay the tax. And then if you can't pay a tax, consider an installment plan. If you have a substantial balance, you're continually getting notices and from the IRS or from the state, or you have an actual audit, it might be time for you to really seek professional help and find out what you're missing, what you're doing wrong, so you can get yourself back on track. And that's a quick summary of IRS notices and penalties. I hope that gives you a basic background of what's going on. As I mentioned earlier, you are welcome to contact me directly with any questions. I'll help you to the best of my ability. And if you got any questions today, please ask. Thank you.
Thank you, John. Yes, we do have a couple of questions here posted. This is from Andrew from California, and he is actually asking if is FTB the same as the state of California tax?
Okay, Andrew. So in California, I believe that is for the Franchise Tax Board.
Mhm.
And there is, I know that for LLCs in California, I don't live in California, I'm not an expert in California taxes, but I know that there's for LLCs in California, there is a franchise tax board or an annual filing fee when it comes to LLCs. So is FTB part of California Department of Revenue? I can't actually answer that with 100% certainty, but it is part of the California tax system.
Okay. All right, perfect. Thank you, John. So, the second question that was posted, this is posted anonymously, but it's from New York. I have a letter saying there is a penalty and interest being charged to me. Can I get the IRS to write
Mhm.
off the penalty? What about the interest?
I'm sorry, I missed a little bit at the end there, May.
Sorry. So, can I get the IRS to write off the penalty? What about the interest?
So as I mentioned here as we were wrapping up, you might get the IRS to write off the penalty, depending on how
Mm.
much it is and what caused that penalty. You'll have a chance. You are highly unlikely to get them to write off any interest. But again, depends on how big of a number we're talking about. And if you're trying to negotiate some type of settlement, maybe there's a way you can do that. But in general, they're not going to write off interest.
Okay. Well, that answers the question. Thank you so much, John. For our last question, this is from Betty from Nashville. What if I don't agree with the unreported income on the letter from the IRS?
Okay, Betty. What if you don't agree with the unreported income that the IRS is saying? So I'm just going to go out and go on a limb here and guess that the IRS came back to you and said, hey, we have tax documentation, whether it be W-2s, 1099s, something like that. And they're saying, we've got information that you have $100,000 of income and you only reported, let's say, $50,000 of income. Um, if you disagree with that, you can provide your information to the IRS, how you reported your income, or take a look. You're going to want to ask the IRS to provide more information um, as to how they computed that income. If the notice doesn't tell you, they may have 1099s. Let's say they have a 1099 um, that you don't have. The question becomes, did you not get the 1099? Was a 1099 issued and you didn't receive it, and therefore the IRS may be correct? Or was it a 1099 that was issued in error? Maybe the 1099 the IRS has the wrong social security number on it and it's not your social security number. So there's a number of different things that can go on there. A lot of times I see if the IRS is saying you have other income that's not reported on your return, a lot of times they can be correct, and it might just be something that was missed on your end. If it wasn't missed on your end and it's somehow in error, yeah, you just go ahead and send a letter to the IRS responding to that notice saying, that's not my 1099, that's not my W-2. That's kind of how I would approach it. I hope that helps you, Betty.
Okay. Well, thank you so much for that answer, John. That was actually the last question for today's session. Anything else that you want to add?
Um, no, May, there's not too much else to add there. Again, for the people who ask questions, if I wasn't able to answer it quite to your satisfaction or you have more information, please feel free to contact me. For basic answers and stuff like this, there's not going to be any type of fee associated with it. So if you need a little more information or it wasn't clear, you're more than welcome to contact me, and I will do my best to get more specific with you. I wish everybody the best, taking care of those notices, and thank you for attending today.
No. All right. Well, thank you so much for your time, John. And if there's no more question, then, well, that covers our questions. And that's it for today's session. I want to thank you for attending. Our commitment is to help you reduce your taxes and increase your wealth. We do this with a try tax method, FDIY do it yourself, DIT do it together, and DIA do it all. Three methods, one solution. Reduce stress from no IRS or state tax debt and a happier, healthier life. If you are not yet a member, please join for less than $20 per month. We need your support to continue to offer more of these sessions. Since it is now tax season, we have many sessions to help you do a better job of doing your taxes yourself. And of course, if you want help, we have a team of experts who can do your tax return for you. Please check our website at taxresolutionhelpcenter.com and please join us a member today for $19.95 per month. Thank you all for attending and have a wonderful day.